Good morning. It's Monday, the 3rd of March, 2008. It's pre-opening. It's quarter to 8 at the moment. Just our position carried over from Friday. We've now got almost £1,500 of profit here. So we've got a 60. You can see here the FTSE is 76 points down at the open. So we're doing well. I still think there's a potential here for quite a sharp fall. It's always, again, it's always difficult. We've held over the weekend. Many traders don't like doing that because of the risk involved. I don't normally do it unless I've got a profit buffer in place. There is, if you're in profit, then okay, you risk losing the profit, but you don't actually risk so much making a loss on the trade. The problem with holding a position over the weekend when you've got no profit in hand is, of course, that you could see a large gap open against you, and you could make a much bigger loss than as per your normal parameters. But with a profit buffer in place, it's much easier to do that. Okay, there's not greatly else to say, I don't think, at the moment. We'll have a quick look at the chart, actually. Right. This system actually, just to explain it, is a delayed system. I have 3 computers I watch with 2 real-time price services, one delayed. I use the this particular service for more reviewing the charts pre-trading, so it doesn't need to be real-time. And I'm also using it to record this thing because I want my real-time systems to be clear and have nothing else going on. I want to be able to focus on those. So this is why I'm using real time here. So I'm not using I'm using delayed here. Okay, this is the daily chart. Now, if we can look back at the this is the picture over the last few months. FTSE has been seeing these highs at 6750 for in last year. I've been expecting a fairly big fall. We saw this big fall here. It bounced back up again. Now it's fallen more severely here. Notice there's a triangle here and a triangle here, so we're seeing quite a lot of triangular action here. The falls come in like an A, B, C, A, B, C, and then another A, B, C here. So what we could have seen here is a big A down to here, a big B to there, and now we might be seeing a big C come in. Clearly, if that's what we've seen, then we're going to see this is going to be a very good trade. But we never can be sure. But this is one of the reasons why I'm quite keen to run this. I held over the weekend. Holding over the weekend is much easier when you have got some profit in hand, obviously, it's much riskier. When you haven't got any profit in hand, you may find that if the market gaps against you, then you may find a much bigger loss than you normally encounter, and that your system is designed to cope with. Trend lines and trend channels are a very, very useful technique. There's something I perhaps haven't used as much as I should have done over the years. I think there is a randomness here. It's very easy. We come to a new technique, start to use it, maybe it doesn't work very well when we first come to it, and so we abandon it, think, well, that's not too great, and go into other things. It just shows you can well pay to be perseverant and look at these things in greater detail. Certainly, the triangles have been fantastic around here. I mean, we're looking at a fairly short period of time. We've got fantastic triangles. This very large trend channel, which is clear on the weekly chart, which I'll show you in a minute. It's been hugely useful on the rally. We've now got a trend channel on these blue lines, it may need to be slightly shifted because it didn't catch the low here, and also slightly a drift here. So I think I'll redraw those. This system is a delayed system. I have 2 or 3 computers showing charts. The other 2 are real time, but I'm using this one for the recording purposes, so it doesn't obstruct the real-time services, which I also have running. Okay, it's coming up to time now. I'm just we'll look at the weekly chart in a minute. Okay, this is the weekly chart, and this line here is a very substantial trend channel, very well documented over quite a considerable period of time. Slight blip up there. But very, very useful lines. I've been sort of fanning it out a bit, which and again this is useful because we can see that the corrective rally has actually tried to get back and failed to over that fan line. So I mean that also is a major sell signal. There's a lot going on here at the moment. In fact, it's a very interesting situation. Okay, it's just came at 8 o'clock, so we've got the FTSE Daily Index IG chart here. I'm using a 1 minute chart. I mainly just switch to the tick chart, depending on what the open is like. As you know, we want to ignore the first few ticks, which can be a little bit confusing, but we'll see how it goes. Right, so just about any minute now. Well, in fact, we've got about 30 seconds to go. So it looks like we're going to see a pretty negative opening here. It's just whether buyers come in or whatever. It'll trigger the PDS into whatever it's going to do. So, as is the IG chart, there'll be no gap here. I mean, we're there shouldn't be any gap. Right, the futures have opened at 58, 57.66. So we're looking for the first 5-10 point move. So this is the cash price, it's slightly different. So at the moment, it looks like the low is the key thing, 58.01.5. So we're looking for a move up to 10 level. Fairly quiet opening, and then, well, it's just got to be faster. So we've now got a 10 point range, and the cash markets are right in the middle of it at the moment. So I mean, this is why markets do gap in some ways. I mean, the gap is to take into account the negative sentiment, but to give people pause for thought before they sell. Really, it's sort of a balancing item where if there are buyers, they might be very keen to come in because they want much lower prices, but of course they'll be cautious. And sellers will think twice before selling at such lower levels. And that's what they're doing now. They're thinking twice. Meanwhile, our position is now £1,550 in profit. Okay, it's still nothing. Still seeing a very, again, we've got a very similar range on the two markets. In fact, the futures have given a signal, have given a buy signal, but this one hasn't. So for the time being, I'll wait until we get a clearer signal. You can see the range here is less than 10 points. You're bound to see this if you're using different charts. Although they might be extremely similar, there will be these small variations which will change our signals. I mean, it could be a fundamental change. It's possible that the futures have given a small buy signal at the moment. Now it's possible we might see a sell signal which stops out that, which would have stopped us out if we'd been on the futures. I mean, these variations can be quite significant. I mean, obviously that's a fairly significant difference. But it's a question of developing your style, deciding which way is the best one to do it, back testing, making sure that the thing has stability and robustness, and then going with it. Okay, I'm going to pause that here, and I'll come back to you when we get a signal. Okay, just to resume, I mean, it's been a very, very quiet open. We're actually now just about maybe to get a signal. Yes, we've been triggered short. I'm going for £5 a point actually here because it's we're already positioned on the other position, but it's just been did reopen. I'm just not very encouraged by it. So I'm going to put a stop in fairly tight actually as well for similar reasons. I mean, we're now short. It's gone down. 10 points has been downside. We got a bit of positive. No, sorry, we didn't. We got it at 57.99, so we got him 11 points away from the. So it's just 1 point of negative slippage. I'll put the stop in up here. I mean, it's actually down below 5.9 now. So if we get below 5.8. So if we're going to see, if that's going to be a failed break, we could see quite a sharp move upwards. So I don't want to hang around too much. So again, I'll be back later on to tell you how it's all been going. Okay, right, we put a stop in, we got it at 15.99, put a stop in at 58.13, and it's now 58.02. We seem to be bouncing a little, well, slightly concerned at this level because if we do see if we see a bounce back above 5.8, and we have seen a very small one so far, inconclusive, but a very small one, then we could see a very solid rally. So I now take some profit on our major position, the £10 a point. We're £600 down. I'm going to take profit on half that position. So let me just do that. Just so you know to do these sort of things. Use the arrow keys here. You can reduce the amount you're going to. So we get down to 5. As we sell, we're going to buy. So we're getting out 5,774 now. Okay. So that's £800 or so in the bank. And we've still got another £790 left. This may well get stopped out, in which case we're down to £5 a point. I won't close the rest immediately. I'm going to see what happens. But yeah, it's we could see a 50-point rally here. We may get an opportunity to re-enter. It's always difficult re-entry. Yes, it's nice in theory. You take your profits, and then you look to reposition into the subsequent bounce, but you may not get a sell signal. It may be the subsequent bounce just collapses at some point, or you may find that there is a sell signal of sorts, but you put in a stop or something and get stopped out of your reopen position, because of course your risk parameters tend to change to your opening risk parameters rather than your I'm in a position risk parameters. So it's sometimes a mistake, but having seen a false break below 5.8, which is a buy signal, I want to take some profit at that point. So again, we'll be back later on. Thank you. Hello again. It's now about 7 minutes past 9 o'clock in the morning, 3rd of March. What's happened is we've seen the market find support here, go back above 5.8, stop us out of our PDS system, go down again, make a new low, but it turns out to be a failed break. And now it's gone back up again, and it's just struggling a bit around here. But this is the key level. Of course, this is a 5.8, so this is a fairly important level for the market. A failure here would suggest that we're going to crack down more seriously. A break above here means we could see a very substantial rally. So I'm now going to lower the stop on the remaining position. We've only got £5 a point left now. Let's just have a look. So it's been a rather difficult. I mean, that's not an easy. What I'm trying to say is that having seen this sort of, we opened up here. In fact, so we opened up, came down, back above the highs, back above the lows, and now we're hovering around again. It's if you're short-term focused, and focus is a key issue for traders. It's much easier to stay with positions longer if you've got a longer-term focus. I'm a fairly short-term trader, and for better or for worse. And so, if I look at the shorter-term systems situations, so now I can lower the stop on it to above the high on the day on the futures. We've got no stop at all at the moment, so let's just deal with that. So edit. So the future's seen a high today at 57.87.5, so make it 57.88, which is 20 odd points away from the current action. So it should give us enough room to find out whether or not this is going to be whether the market will break above 5.8 or not. I'd say the futures are trading a discount at the moment, so there is some confusion there. At least it may seem confusing, but it's just a matter of understanding how these things work. It's if the cash holds above 5.8, then the futures are able to stop us out. But we're locking in about 600 points there, so it will be overall a good position. So that's a stop in place, and you can see it there. So we'll just leave that for the time being and see what develops. Thanks. Okay, we got stopped out of it's now about 4 o'clock on the 3rd of March. We got stopped out of the remaining position. So that trade we made £1,510, and we lost 72 quid on the PDS at £5 a point today. I can cut it down, as you might remember. We'll just look at the chart. So anyway, that's plus 1510 from £10 a point. So, I mean, clearly £10 a point, depending on your viewpoint, is either a big or a small position. But if you're doing £100 a point, then obviously you can add a zero on the end of that. Anyway, that's up to you. We'll have a quick look at the chart before we say terminate this session. Right, here's a chart of FTSE. It's a daily chart. So we've still got the negatives pertaining here. Still got the fall back, and we're going to switch to the hourly chart. So I think what's happening here is we're seeing a fourth wave coming in on Elliott parlance. We saw a failed break down there to new lows, then got stopped out on the rally, and it sort of counts as a 1, 2. This may be the 3 here. We could be seeing a 4 here. Right, so I think it's still more downside to come, but maybe not a huge amount more. So the fact we've got out may not be a disaster. If we have seen this, we're going to see another corrective rally up to here, say, then another great big fall. It just depends on the time it takes. Okay, I guess that really concludes that trade. Thanks for listening again.